Good afternoon, everybody. Hope you're doing well. We'll get started in just a sec. If you guys have questions today, feel free to prepare them. I'll do a little Q&A at the end if there are any questions or chart requests. Just getting a couple things set up here. All right, let me get the chat up. We'll get started. Okay. What's everybody up to this weekend? The weather has finally gotten pretty nice. I smell football in the air. Very excited for that. Just getting a couple things up here. And we'll be on our way. Okay. All right, everybody. Hope you're all doing well. Let me get my screen shared and we'll get started with our prep for the week. All right, before we dive in, just quick thoughts on last week. Like I said, if you guys have questions, I'll be looking at the chat, so just let me know. Yeah, so last week we finally got a pullback in the market, but there was a very heavy week of earnings. We had a lot of opportunities. So if you're new and don't know, we track all the playbook trades in a database just for pattern recognition purposes. You can go in here and kind of check out any of the opportunities from the prior week to get to know our playbook and how we approach the markets. Somebody's saying quiet sound. Hopefully that's a little bit better. Let me know. There's a number of good trades last week to review, so take some time if you haven't already to go back through there. Overall, we're seeing a lot of the earnings playbook setups play out like your day one continuations, opening drives. Meta was a very good opening drive last week here on Thursday. We had this nice trap below some of that pre-market structure and turn on the open. Unfortunately, it didn't really turn into more. I thought we could see a push into 800. Just didn't quite pan out that way. But this was a really good trade. A size risk on that Even had Reddit, which was harder for options, but very similar, right? Trap that pre-market structure and turn up off the open. This was, while this looks quick initially, it was about 1 to 3 risk reward with the shares, and then ended up making this kind of secondary turn a little bit later in the session, even with the market selling off. That was very good. I thought Microsoft was one of the top ops of the week. This was one I didn't trade. We did call out in the prep, but just didn't quite execute it. Really just an exhaustion gap with continuation that played out really nicely. And the thing that I liked a lot about this was the fact that the stock had just been grinding higher with very little momentum. It was just a very, very consistent grind higher. And often when you have that and there's reluctance to pull back, and people are kind of just slowly chasing this higher, you'll get these kind of blow off tops or exhaustion gaps that play out to kind of reset price and structure a bit. So earnings, I was a little hesitant just because Meta and Microsoft earnings were both very, very good. They turned out to be, that it didn't matter. Obviously here with Microsoft, this opening move on the exhaustion gap played really, really well. But if you missed that, then the day two move was equally as good, paired with some market weakness on Friday. So I thought that was easier. They're both very good trades, but this was easier, probably one of the easier ops of the week. Didn't execute this one, but just in the review, this is your day two continuation under the prior day low and trended pretty much all day and closed near the lows. So just a couple of trades to review from last week. The earnings playbook is playing really well right now. A lot of those opening drive day one plays or intraday setups on day one as well. And then the follow through or continuation move, we're seeing a lot of these work really well, whereas we haven't really seen, that in a minute. So it's kind of the end of 2022, early 2023 playbook that we're seeing execute well. So we still have, more earnings to come. We'll go over that here in a second. Big picture with the market. Obviously, we had a bigger pullback last week. This has been a highly anticipated pullback, I would say. The market likes to rest and digest in two key ways, usually through a range that, price resets and then, averages catch up and then you see a continuation higher in a bull market. Or you can see price reset through bigger dips. And since the April lows from the tariff volatility that we had, we've really not seen many large pullbacks. A couple checkbacks in here, but for the most part, market's just been kind of grinding higher. And now we finally got a reset through a more aggressive pullback in the market. So this is, overall bullish in terms of the trend holding. It's, not to be too concerning yet. I'm not one to really predict what's going to happen now. I think that this is largely where the noise will start to pick up a lot, especially on X. And as you talk to other traders, which is totally normal, as you see volatility increase, more people are, out there, calling tops and bottoms and speculating. For me, it's not what's important. At the end of the day, making money is what's important. So you can be more reactionary, at least the way that we trade, and do well. So the way I like to go through this is just different scenarios that could play out. Ultimately, the liquidity is what drives the market. So from a fundamental standpoint, if liquidity is good, there's not as much cause for concern. Usually the Fed intervening is what ultimately really moves the market at the end of the day, or shifts the market cycle. And right now it's from my perspective, kind of status quo for the most part. If that begins to change, then we'll adapt. The good thing is, after going through several different market cycles, the playbook that I trade is very expensive. It was built through some of the early tariff stuff back all the way from like 2017 to 2019 was like one kind of stage of the market, but then 2020, 2021 was very, very breakout driven. You had, a lot of the COVID stuff going on. The market was driven by a lot of liquidity, and you pretty much could just throw a dart on the board, it seemed, for breakout trades, and they were working super well. And then we had 2022, which brought in a lot more volatility, obviously, in the market, and a sideways action for over a year for the most part that for me was super important in my trading career because it forced me to develop expand the playbook a lot more because obviously breakouts and things weren't working. And that's where you saw a lot of the earnings plays that I was just talking about begin to be developed. So the cool thing is just, I'm kind of going on here, but regardless of what stage the market's in, whether it's in a bull market, bear market, or kind of, digesting sideways, there's different types of plays to go to. It's like running an offense. If you like sports, you can read the defense and then run plays. That's how I like to think about it. So with where we're at, big picture on the market right now, if we throw the EMAs on just to give some perspective, we're pulling back into the 3450 EMAs for the first time since those April lows. So we kind of turned up, and then since then, the 921 has supported price this entire year since that point. I should say last quarter or so, and we're testing 3450 for the first time. This is usually a very strong spot to back test. This is a decent range though, between 6150 and 6236 or so. As we look in a little bit closer, this is a very important spot. So we have big support between 6200 and really 6240. We'll say, give or take a couple points, that was tested last week. Now, the way I'm viewing the scenario going into this week is kind of in two parts. We either see a bit of a bounce first back to 6290, maybe enter into this gap between 6336, in which case some of the names that have been the strongest will be where the focus is at. We'll talk about Meta here in a little bit. I think there's an interesting play that could set up well with the market if that scenario plays out, or if we need to extend a little bit further before seeing a snapback to the upside. I'd be targeting the 6147 spot below 6200. So if we lose the 6200, I think we'll get a little bit of a kind of rubber band effect that could play out later to the upside, but I think this will stretch more. And the reason the 6147 is on watch is this is the previous all-time high before the tariff volatility came into the market. So, these were the previous highs. That would be a pretty big spot to back test. You also have the 50 EMA there as well. So if we get a little bit of an exaggerated move lower into that spot, then I'd be looking at kind of some different setups for a snapback higher, but in the short term could play that to the downside. Looking at QQQ to play that scenario out to the downside, just because of how well defined 552 is here, and tech is usually going to be a little bit more volatile if the risk off theme plays out. So if that sets up under 552, we've got initial support at 549, and then not a whole lot until we get into closer to 5400 or 554. Sorry. SBX under 6200, obviously 6150 is below that initially, and then not a whole lot of support until you start getting into like the 660, 6100 range. So that's overall technicals and some just big picture thoughts on S&P. As we kind of look ahead to what's to come this week, from the economic calendar, we've got some data on Tuesday, some PMI data. We've got crude oil inventories on Wednesday and 10-year note auction at 1 o'clock, and then also 30-year auction Thursday at 1 o'clock. Initial jobless claims in the morning on Thursday. So some important things to look out for and watch, but overall not quite as heavy as last week. Last week was obviously a very jam-packed week. As far as earnings go, last week was the busiest, so we had the bulk of our earnings coming out, but there's still we're still in prime time earnings season with a lot of names reporting. Some of the highlights that I'll be focused on this week are PLTR tomorrow after the close, and then AMD on Tuesday after the close. Those will be the top two focus, and then there's plenty of others that will likely trade and be watching. CAT will be interesting because if we see a little bit of this rotation in the market into some more defensive names, it's possible we could see CAT, DE, even like Costco was strong last week. So a little bit of an appetite for some of the more value plays is possible. So we'll want to monitor that rotation. And in the same way, if the risk off theme continues, you would want to look at some of the high flyers to get continuation lower. Your some of the recent IPOs could be a good target for that. Maybe some of the quantum names, those have been moving very aggressively in the risk on theme. So if that is turned off, so to speak, and we see value catch a bid, then we'll want to look to maybe trade that to the downside. So it's still early. Like I said, I think big picture, I'm in a pretty neutral stance here. I'm not I don't have a high conviction one way or the other. I would say I lean more bullish just because a couple days of pullback is just that in a bull market. It's a couple days of pullback. You have to see how dips respond and then go from there. We're entering a little bit more bearish seasonality, so things could get dicey. But until then, you just have to take it one day at a time. Some others that will be interesting. We do have QBTS on Thursday, so in that quantum name, Eli Lilly. So healthcare has just been absolutely beaten up, as we know. So that'll be quite interesting to watch, see how some of the healthcare names respond to that. And then a bunch of other side ones, HIMS, SMCI, APP, TTD, RKLB. A lot of these names have been moving well. XYZ, you can kind of look at the board here and see it every day. And we'll be, posting the list of what names report, and every night so the morning call, the pre-market note, we'll have the list of names, and then a daily market recap will post the names that are coming. So just so you have a short list. All right, so that is a big picture and what we're looking forward to this week in the market. If you guys have questions about any of that, let me know. I will do some Q&A at the end. So next I'm going to go through some trade ideas, some setups that we're looking for, and then as well as a couple bonus charts that stood out to me that didn't quite make the ideal list for the week. I'll get to the Q&A at the end. All right, let's dive into some of those trade ideas. Let me just pull up my list here. All right, so Apple is up first. Apple is this is probably one of my favorite setups going into the week. The only hesitation that I have is that what the market's going to do next. Do we see 6,200 breach first, and then get that 62 or 6,150 back test, or do we kind of bounce and in this range, consolidate for a couple of days? I think that is going to be very important with Apple. The alignment with the market is typically really important for Apple. But let's just go through what this is looking like. So we have a bit of a bear pennant set up on the weekly, and it's one of the only, actually, I think the only Mag 7 name that's been below the 200-day and lagging pretty much all year. What I was looking for in the earnings was something a little bit different, or a little shift in narrative, maybe speak a little bit more on AI, or something that could shift the narrative that we've been seeing in Apple over the last year. It's not very compelling at the moment. It's obviously still a behemoth, and you can only be but so bearish, especially in a bull market. But this is what it is. This is on the verge of breaking a very big weekly structure to the downside. And if we see continuation in the market lower, this could be a fantastic trade to the downside. We've got the stock below its 200-day, multiple attempts to try and reclaim this 215 area that has failed over the course of the entire year. I should say, like the last couple quarters. We were higher in March, but since this broke down in March and the tariff volatility entered the market, it's not been able to recover, whereas pretty much every other name has, for the most part. So a bit of a lag here. We're going to be aligned right with this 200 spot, which is also pretty compelling. So S&P 6,200, Apple weaker and breaking 200, 202, the support area. I just really like the confluence here for the downside. So going into the lower time frame, how we look to trade this, you have your earnings reaction, which again rejected this 215 area again. Couldn't see any attempt higher. Nice front side rejection off the open and opening drive on Friday. And then we close on the lows. So anytime you close on the lows or in the bottom 20% of the day's range following a significant catalyst, the data supports the continuation move. So it's typically stronger odds for continuation lower if that is the case. So that qualifies for this. You do have a bit of a range to fight through for the downside. So that's part of the reason why I think the market alignment is going to be very important with this one. But to put it simply, if we can break under prior day lows and hold, looking for continuation minimally into this 199-200 spot, and then if we get follow through below that, I'll be targeting 195. If the stock starts to breach back above like 207.50 or so, then it's kind of invalidated, and I would rather just kind of sit on hands. But as long as we're holding below or consolidating above and crack this at some point in the week, I really like the way that this is set up for the downside. It could be a nice way to simplify the downside as well as QQQ this week. All right, so that's Apple. Let's see. What's next? Circle. So Circle in that kind of that theme of risk off, I would say. So IPOs have been a super hot theme this year. We had CoreWeave, Circle, now Fig, which we'll talk about Fig a little bit. Remind me if I forget. Some really, really nice. Every year you have some kind of theme that creates incredible trades. And, I've managed to catch almost all of the moves on this. We caught this. The one that I missed was actually this 160 break, the initial leg. We caught this kind of push up to 300. We caught some of the reversion. We caught the big reversion trade down to 170. And then we even caught this move higher on the second leg. And then I just missed this reversion trade here. But anyway, they've been providing a ton of opportunity. And there's a lot of edge here, not to, go on a side mission here and rant about that, but they've been very in play, very good. The thing with this is at some point, these will start to revert back to the mean a bit. And if you get a correlation with the market getting a bit of risk off, we could see some really nice follow through before these find more meaningful support. So what I'm looking at is for this to see continuation lower if we break this 165. So that was the prior peak here. 165 has a couple tests. There's not a whole lot of price history, which has made this, I think, a little bit trickier in the near term. But nonetheless, if we break 165, there's not a whole lot of support or structure until you start getting to 143. That would be where I'd be targeting if we can break below. I'm looking at more of a swing for this. So this to me is more of like a big picture trade versus trying to time a day trade. So I'm looking out a couple weeks on the options on this one. And I'd really, I think you can manage this close to the vest initially, which is why I have a stop on the trade ID at 171.50. You start to reclaim that, it just starts to get a little bit messy. Shorts risk getting kind of sprayed higher here. But big picture, I would like to see the prior day bar hold below. So if this, basically holds below 181.50, then I'm in more favor of seeing this break down. But I think you can manage it a little bit tighter to the best with this 171.50 level, at least early in the week. So that's what I'll be watching. And the risk reward is better there as well if that plays out. And then if it starts to reclaim 181, then just kind of hands off. Maybe sets up an upside trade, but wouldn't be my initial pick, at least yet. All right, so that's Circle. Looking at those August 15th 150 puts as a bigger picture idea. Next, we've got Meta. So Meta, this one is a pretty interesting setup if we get that bounce in the market. So in the scenario that 6,200 holds, or we start to bounce maybe up to the gap around 62.90, or even into the gap between 62.90 and 63.36 or so. This could play out really well because I think ultimately earnings were very good. We broke out to new highs. This had been very difficult to trade. It was just basically flagging on the daily for over really a month, basically, and just didn't do a whole lot, even though the market was going higher. And then it just posts a big earnings and kind of shoots up right through all-time highs. If this didn't have market weakness, I truly believe that 783 pre-market high break would have set up an 800 move. But this was just kind of became slippery because of the market pulling back. So the reason that's important is if the market sees that bounce trade play out first before maybe some continuation lower or what have you, this could set up a really nice reversion back in the middle of its range minimally. So a short-term bounce trade could play out nicely. And we've back tested these previous all-time highs. So these previous all-time highs around 747, most recently in June, and then going back to February, we have 741. We have a little bit of an active failed breakdown at this 747 and change level. So on Friday, we saw the continuation move lower, and then we did trap this spot into the close. Not a huge bounce, but it is an active failed breakdown. So like I said, if the market starts to bounce, this is very simple. As long as it holds above that low, really, then you can look for a push back into this range. I would expect to see Meta lead with some strength in that scenario, just given the earnings move, and as traders kind of say, okay, maybe this was just a little bit weak due to the market, and now it's ready to catch back up and lead. The target for that would be at least back testing the 765 spot. So a little bit wider stop would be 741, which is the prior all-time high, or a tighter stop would be the 745 or the low from Friday. All right, that's Meta. So looking at 755 calls, if that area holds. I see some questions coming through the chat. I will get to those chart requests just in a little bit, almost through the list, and then we'll talk about them. All right, MP. So MP is a name that we're looking at for common stock. It's just been a very strong name. You go out to the weekly chart on this. It's just a very huge move, pretty much vertical over the last several weeks. On the daily, a couple things that are interesting in the short term. So price has just been consolidating higher following these gaps. And what I like about this is on dips, so we had a little bit of kind of a failed breakout above these highs, but the dips were super supportive, and with market weakness. So that's a very good sign of strength. If you pull up some of the EMAs, we also just kind of check back to the 9 EMA. I can pull this up here as well. Take the 200 off. All right, so you just see it's kind of just holding the 9 EMA and starting to try and curl higher. And we have multiple tests at this prior high. So this is a short-term idea overall. I think, big picture, obviously the name is very strong. But, a lot of traders will look for bigger dips before getting involved. And that often can create this, chase higher on the strongest names. So you don't want to underestimate how high they can go before they start to revert. There's really no sign of a reversion yet, as long as this continues to defend its daily lows and support in this range. So with all that being said, we've got some targets above. If we can breach these highs, looking at a breakout to 68.50 and then 74 after that. It's worth noting that I did get a lot of confluence at 83 for whatever reason. So when I do the targets above all-time highs, it's a combination of extensions, fib extensions, but what's significant about some of the levels is when they overlap and there's confluence from multiple time frames, and I have that at 83. So something to watch. It's oddly really, really accurate. I've been using that method for years to plot levels over all-time highs, and it's super, super strong. So we'll be keeping an eye on that. Doesn't mean that this just happens all at once, obviously, but that would be some targets to watch as resistance. And then this would be invalidated near term anyway, around 59. If that level drops, then I'd be kind of more hands off and wait for it to set up again. All right, a couple more trade ideas, 2 more trade ideas, and then we'll get to some questions, and then we'll wrap it up, and everyone can continue to enjoy their Sunday. All right, so Netflix. Netflix has been one that I've been following. If you've been in the group since earnings, I've been short. This really has been an awesome trade. I ran out of time on the 1150s last week, unfortunately. But overall, it's been a really nice move. And the thesis on this was pretty straightforward. The stock is up like over 65% since the April lows. And then we're just pulling back, around 14% now. But at the time of me, getting involved short in this, it was only like a 10% pullback. So like the thesis was pretty simple. The stock has been super strong. Even if it pulls back 20%, it's still up really nicely on the year, and that's still considered healthy overall. But in the near term, you can trade that move to the downside. So that's really what we've been looking at. It's just been holding below the averages. Had a nice little back test on Thursday, and almost again on Friday. It was a little bit reluctant to sell, not a little bit. It was very reluctant to sell on Friday with the market. So that was a bit frustrating, just because I've been holding on for that position for quite a while, and it just didn't get that follow through, even though the market sold off, which isn't too surprising, to be honest, just because when the market's been weak in the past, Netflix has just continued to be strong. So Spotify and Netflix have been that kind of almost like a hideout trade, where when there's volatility in the market, they've actually done really well. So that's probably a lot to do with it. But in the near term, what I'm looking, so that does cause a little bit of hesitation, for what it's worth, because a lot of names saw bigger pullbacks on Friday, and Netflix kind of held up, but it closed weak, right? So it still managed to sell the pop back to 1180 and close almost on the lows. So that keeps this setup alive. And really what I'm looking for is just for it to test some bigger support. We're starting to get into, some better structure here finally. But the bottom end of this structure is 1100. So if we see some continued weakness, even if the market holds up a bit, you could see Netflix catch a little bit of weakness before it finds some more meaningful support. So it's just been selling every pop and trending lower. And this would be around that, I believe, 20%. Let me see where 20% is. Yeah, 20% is at 1,070. So this is just arbitrary percentages, but a lot of times stocks, when they correct off highs, you'll see anywhere from like 10 to 20% of a pullback on some of the strongest names, and then they'll find some support and then begin to lead again. So, not necessarily saying this gets to 20% or whatever, but that would be the bottom kind of end of the target between this 1,070, 1,100 area. Could be a nice target in the short term before finding more meaningful support. So the way that I'm looking to trade that is really simple. If we breach under last week's lows here, then I'll look to go short and keep a relatively tight stop somewhere around this 1164 spot. Because if we start to reclaim that area, then it likely begins to turn higher and catch some momentum. So, and you could consider longs. I just think that there's probably going to be better longs out there, but I'll consider it. I think it's going to be a stronger long when it gets back over 1200, but we'll monitor it closely. All right, Snow. This one's an interesting one. If you know me, I don't like this name, or at least trading it. It's just one. It's in that class of names that just tends to be really tricky. But the setup is pretty compelling here. I didn't see. So if anyone in the chat knows, I looked for news for quite a while, and I'm either blind or there wasn't news that I saw. It just was down with the market and some sector weakness. So I did see that there was some unusual options activity, which sometimes is meaningful. Sometimes someone knows something, and probably most of the time doesn't mean much because you just don't know what the full book is. But at least from a technical perspective, there's a couple things that make this interesting to me. So for the past literal year or two, I've been talking about Snow, and like I said, people will ask about it pretty regularly, and I've just been saying wait for 200. Literally, like while this was at 120s, 170s, 150s. It's just like, it's just a hard trade until we get back over 200. And once it gets back over 200, I think it'll start to be a little bit better. And what's interesting is it seemed like it would be, but then it's really not been. It's actually been kind of doing just what it normally does, failing to really get any meaningful continuation higher. And then now, traps this 226 and has a big sell-off on Friday. So it's just, this is one of those names that one day it'll probably, really turn around and become good. But before that, it's just very difficult to trade. So the setup here, though, is a continuation on the prior day low. When you have a big candle like this and close in the bottom 20% of its range, it increases the odds for continuation to the downside. So initial target would be, at least 200, which could happen very quickly. And then if that breaches 194, it would be a pretty big back test of this prior range high in February. So just looking at puts here as a, I would say not necessarily small, but not also a big idea just because of the way the name behaves. But yeah, pretty simple, pretty straightforward. Under this low, we would be targeting a move to 194. And then I'm not really interested in upside until it's back over 227. All right, so that wraps us up with our trade ideas, big picture on the overall market, and ideas for the week. A couple questions in the chat I can get to. If you guys have anything related to the market or chart requests, let me know. I'll spend a few minutes doing that, and then we'll wrap it up. We're not going to hang out too long, so everyone can continue about their Sunday. All right, so we've got a question on TEM. I believe I saw their earnings are coming this week. Am I correct in assuming that? Let me see if I can find it. This is the hard way to find it. It's like I could just look it up. Hold on, let me just look it up. All right, TEM, August 8th. Yeah, so Friday. So they have earnings on Friday. This was a really interesting name for a while in February. Started to get kind of interesting again here, but that's really just not done much since. Go out to the weekly chart. I mean, it's very messy, right? So a lot of times people, like, when a name like this gets really in play, there's like some kind of expectation that it's just going to be good again or all the time, and that's just not necessarily the case. So make sure you let price action lead. Again, everything that I say is within the context of a trader, just for what it's worth. I will share some basic opinions and thoughts on some, companies or swings, but it's not my area of strength or expertise. So TEM, 52.62, important support below, ahead of earnings. What is the short float on this? Out of curiosity. So short float, I knew it was elevated. So 26%, it's pretty elevated. So an idea that I would say could be interesting here, while the chart, this is just not super compelling in any particular direction, I would say that something to consider or look out for would be if you get a little bit of a squeeze into earnings. Just because the short float is elevated, you could see something like that play out. You're near a pretty important support level at 52.60. So if you see that hold and start to reverse higher, maybe you get a little bit of a risk off from shorts into earnings and a little bump. So I would watch for something like that. Near-term technicals, you could watch this reclaim of 55.90. So a reclaim 55.90 could spur a little bit of a rally into this 61. All right, let's see what else. XOM. They just recently had earnings. So I'm going to delete the charts. I'm a little OCD about these levels. And I mean, you have to, anytime that there's a chart like this, I just immediately will go to the weekly because it's usually really messy. So the weekly on almost all of these names have not really done a whole lot. We're just consolidating in this huge range on the weekly. We've got this range between 90, just call it 100, 120 or so. I would just wait. Honestly, I would just wait if it were me for this to break in either direction before considering something. I mean, big picture, this is a big spot to defend. This one, like 105. This was a previous all-time high from 2014. So you could say bullish above, bearish below on that. But for any more meaningful momentum or a new leg of the trend, you'd want to see a break out of this weekly range. So those would be my thoughts there. Let's see what else. PLTR. So this one is actually, people might not like me for this one, but I think I wish earnings weren't tomorrow, unfortunately. I think that this is a name that people around this gap were like talking a lot about the fundamentals and how overvalued it was, and this, that, and the other. And then it does correct a little bit, but honestly maintained a lot of relative strength while the tariff stuff was going on. This was one of those names that just, you look at the candles, every time it dipped, it got bought, dip, bought, dip, bought. It was just, and it's been that way ever since. Every single time this starts to dip, it just gets bought right back up higher. So, in other words, it's began to kind of chase create a chase for a lot of people, and a lot of people that have been holding it since the sub 100s are obviously just cheering from the gallery and just watching it go higher, and they don't really care about the dips. So what I would say, aside from some speculation, a exhaustion gap like Microsoft would be really interesting to me. So more realistically, because earnings is tomorrow. If it wasn't tomorrow, I actually really like this under 151 for a bit of a reversion trade. At some point, I think it'll see some nice continuation lower and just reset. Doesn't mean it's bearish or that big of a deal, but nothing goes up in a straight line forever. So as a trader, I could see this playing out the downside at some point. But the more probable case of a really good trade for the downside could be that exhaustion gap play, just like Microsoft. So Microsoft just grind, and you get this big, gap up on earnings, and just price just resets back into the range. So PLTR could be interesting if that plays out here. If we gap lower, we'll just see where it's at. That could lead to some fuel for the downside for a continuation trade for weeks to come, as price just kind of resets. I mean, this is very far away from some key averages. I know the 200 is maybe not super realistic right now to consider, but 200's at 96. Let's see where the 50 is. 50's at 139. So, like a backtest of the 50 moving average would be like super fine, right, for the stock. It's kind of like what we talked about with Netflix. Netflix up 65%, corrects 10 to 20%. It's not that big of a deal, right? But you can trade that. So if we see something like that play out, I would be interested. The upside, I've just found it hard to trade. It's been an easy buy and hold and close your eyes, but to trade it, it's not been the best, with the exception of maybe a couple trades. Trying to think back to, there was one really, really good trade over the highs. I think it was this day here, May 13th. So just give you a little insight into, I posted about the prior bar system, and I was talking about Charter. This was yesterday, but I mentioned that there's other examples for momentum trades, right? Where for like day trades specifically, that can play out really nicely. So, and this was a great example. So PLTR, May 13th, this is in our archive, set up a really awesome trade that worked like that. So you have these prior highs around here. I think it was actually a little higher. This was just from a prior session. Anyway, for the sake of time, it was around here, right? So basically what you can look at is price made a direct move. And a lot of times this will like make people kind of shoo away and be like, oh, it's too extended. But when this was an previous all-time high on one of the strongest stocks, if not the strongest stock in the market, and it created this day trade that was just really, really good. We caught this one where you can get asymmetric size because of the risk reward. This might seem kind of crazy to some, but when these scenarios set up, which are more rare, you can really, really maximize profits because of the risk reward built into the trade. So when you see basically this move direct into that all-time high, we tested it really clean a couple times, pulled back, but the pullback was shallow. And then on the break, right, this is where you get long aggressively on the break, and you simply trail the prior bar, because if it's a true breakout, it's going to go and it's not going to look back. The momentum is going to stay, and in the best trades. And so the reason that's important is your risk here is, give her like 50 cents. Maybe you give it a little bit more of a buffer, call it a dollar, right? But really, like you can get sized in risking 50 cents. And this moves, 6.5 points. Actually, I think even higher. No, six. Yeah, 6.5 points. Not that you have to catch the entire thing, but if you're trailing that, right, in either the trend or the prior bars, you're catching a huge move with size, with very minimal risk. So anyway, little side quest lesson there for you on prior bars. They can also play out on smaller time frames, on momentum, specifically momentum setups. All right, so we'll see what happens with PLTR. I'll be looking for maybe an exhaustion gap, or with earnings. I trade a lot of earnings moves. It's one of my best setups on day one, day two. I don't need to predict or know what's going to happen. I'll just wait and see what the pre-market structure looks like, how the stock's set up, and then we go from there. We've got different ways to play it. You have opening drives, you have give and goes, you have intraday setups, a lot of different ways that can set up a trade for us. So AMD, this one obviously is seeing a really nice turnaround. I'm kind of sour about it because I've been talking about it since March, that it was getting closer and closer to a turnaround. I completely missed most of this move. But we've talked about it a lot, and it's been very strong. So it's made its comeback weekly. You can see the weekly here, a very big vertical move back up to this 170, 180 area. We're getting a little vertical. This is stretching a bit, but we've had some nice checkbacks within the range that have helped keep it, reset enough to go higher. With earnings coming up on Tuesday, I'm not going to predict what happens here. I just trade what does happen. I think the stock is looking much better. So, if this beats and maybe you get a reclaim or push up to like this 187, that 187 on earnings or maybe a little higher could set up this really nice trade to 200 as a magnet and target. Back lower would be a little bit more nuanced, I would say. It could set up a nice reversion trade back within here, but if it happens all at once on earnings, it's a little bit harder to trade. So, especially given how well it's held on dips. So I wouldn't necessarily be eager to get short. We'll just have to wait and see where it's at. All right, another chart request, Tesla. So Tesla, what do we got to say? So I did put a swing on this, which it's funny because, I've been dogging on the stock for a while. But this weekly is interesting to me. It's just basing in a weekly wedge. Honestly, it's just consolidating. I do think it's getting closer to a bigger move. So on Friday, we had a really nice day trade on this on Friday. But Friday, we trapped this is actually up a little bit more there. We trapped the 300 level, reclaimed it, had a nice push back up to 309. And then we did leak out a little bit into the close, which isn't great, but we defended the bottom part of this wedge and the 300 level. So for me, it's really simple, honestly. If this continues to hold 300, I think we can find our way back to the upper part of the wedge. Big picture, once this breaks either side of this wedge, I think it'll be a bigger opportunity. And everything in the middle is just harder. It just is what it is. So if we start to lose this 300 spot, it could be a really nice trade to the downside, targeting 273, 260. And then possibly lower. By the way, like if this consolidation fails to the downside and the market stays weak and continues to go a little bit lower, this could be really good because it's just been struggling to make any ground. Big picture, long term, for what it's worth, I remain pretty bullish on Tesla. It always finds a way to surprise people. So we'll see what happens. For the upside to be really compelling, a break of this weekly wedge, like if we start to get over 338, 350 again, I think that's going to be like a year maker opportunity for a move back up to the 400s. So we just have to wait and see what happens. I don't know what the future. I can't predict the future, but those are the different scenarios that I'm looking for price to kind of confirm. Appreciate the prep. Catch you tomorrow morning. Thanks for tuning in. See you in the morning. By the way, guys, we're doing a open house this week. So everything you see on X, if you're not a member of our community, is what we do every week and every day. So you'll see maybe a little bit more activity on the public page this week as we, have an open house, make everything available to everybody to see if our community is a good fit for you. Um, we hope that it is. If you have questions about any of that, just let us know. We periodically will do this just so people can kind of see what we got going on and see if it makes or if it's a good fit for them. All right. Let's see. Let's see. That's most of the requests. A couple others. Let's rifle through here. Hims and Uber both have earnings. So, like I said, with earnings, we'll wait and see. I don't know what's going to happen. Hims has been a very, cult stock, if you will. Um, it's stayed very in play. It has a very difficult time going lower. Keeps getting squeezed higher. I don't, earnings is a variable that we just don't know. But I will definitely be watching it. I think it could set up some nice trades, possibly squeeze to 100. Not ruled out here, just given the way that this is held so well. Shorts could really kind of get, in some trouble if this moves higher on earnings. And honestly, into earnings, that could be an interesting idea. If we start to push, aggressively back up towards these highs before earnings, probably easier for shares, but you could see a nice kind of risk off move from shorts um, as earnings are unknown. Uber, Uber's been a tough one. I tried to catch a swing on this earlier, like maybe a month or so ago, and just did not work very well. But big picture, it's continuing to hold up nicely on the weekly. It's just back testing these previous highs. It's a trender, so we'll see what happens with earnings. Maybe earnings will kick this, kickstart this again and become a little bit better. You have activist investor with Ackman behind it, and a lot more positivity around the name this year than in years past. So I'll be watching the earnings. We'll see what happens. Technically, if we get back, honestly, I just think it's easier once it gets over 100. I know that's buying it higher, but it just becomes simpler once it's over that. So we'll see what earnings bring. If you get a move down on earnings, it's just completely hands off for me personally. I would rather just wait. So as far as a medium term or short term thought process goes, long term, different conversation. I'm not going to get into all that for the purposes of how we approach our day to day. ARM. So ARM was a nice continuation trade from earnings. This one's been pretty underwhelming, honestly. It's in a huge consolidation on the weekly. It's pretty much hands off for me. I would say that this 135 is quite a big level. Semis are looking a bit sketchy. They've been hot, so it's not. We're still in that. I'm still in that like kind of neutral spot where it's like, yes, this is a healthy reset and pullback for the market. Can it continue? Yeah. Does it find support? Probably. But we just have to wait and see. I'm very much in a wait and see mode on a lot of this. Like ASML was another one last week. I ran out of time on my roll-ups, but this was a really nice short. We caught, I guess, the 22nd of July, so a couple weeks ago, whatever. It just skipped around for what it's worth, basically a bear flag, nothing clean looking. But this did get some fall through the downside, so we're seeing a little bit of a risk off in the sector. If that continues, that would be also a market signal, so something to watch for the week. But yeah, ASML below 700 I like for downside. ARM under 135 I like for downside. I'm not interested really in ARM to the upside until you start getting back over 168. I think that's where momentum starts to really pick up and some energy will be created for a move to 200 through the highs. So from a trading perspective, I would be looking at, to simplify, 168 up, 135 down. And that's, just a quick note on charting. For me, I found the most success by stepping back, starting out with the bigger time frame and asking where's the most pain in either direction, where are the biggest spots, and then working your way in from there. And I use that process to go through a list of, probably, I think this list is like 200 names. I have to quickly scan it every day just to get a good idea of where everything is at technically. And then we have our obviously our catalyst trades, which is a different segment of the playbook. So, all right, let's see. Any other questions? I'll try to wrap it up here soon. SPX looks like daily hidden bullish divergence. It actually, so I don't look at RSI. You may have heard us talk about RSI a little bit more in the last year. We use it for divergence purposes to time our opening drives. We've increased the odds of our opening drive trades significantly by adding that to our tool set, so to speak. But it's not something I look at honestly often. With that being said, I agree with you. I think it's really interesting. Um, Space Monkey actually pointed it out to me, I believe, on Friday. We were just chatting. He's like, I know we don't look at the RSI much on daily time frames and whatnot, but check out S&P. And I was like, wow, that is interesting. We've completely, just pulling up SPY here, we've entered oversold territory. And, the last time we were this oversold was the tariff volatility in April. So, the market is 26% higher from that low, and it's getting as oversold. That's, I mean, we're in a bull market like that. Let's be real. I mean, anyone that's getting overly bearish, unless they have a crystal ball, the trend is still up. So it doesn't mean we can't go lower in short term. Pullbacks are normal, but you know, this you have to just trade the trend until it breaks, until the bigger picture trend breaks. To me, it's very hard to trade the downside, and this is just like another good observation. Like, okay, does that mean that we can't keep going lower, can't get more oversold? No, but it is interesting, right? Like, we were running hot for a while, and now we've just reset everything. Like we talked about in the beginning of the call, the market likes to reset through a range or through pullbacks. And look at the last time on the daily that this reset. Same thing we were talking about. Perfect example. Price got really hot, and then the way it reset was through a couple weeks of range. So from basically July 7th through July 25th, we actually went slightly higher, pretty much nowhere, but slightly higher. But look at the RSI, basically completely reset, and then we made new highs. Now we're resetting in a big way through a sell-off that can just kind of help re-kickstart things in the market. So it's just one piece of the puzzle. It is a good observation, I would say. So thanks for calling that out. All right, that's it for requests. I do want to just call it a couple charts. I won't talk about them too long. We'll wrap up here soon, but just some things that stood out to me and Space Monkey going through the weekly prep. Urban Outfitters, just a different sector, retail sector here. Look at this chart on the weekly. Really huge consolidation base. So again, a lot of people are asking questions about charts that look like this. Look at what happens when they break that base. You get a lot of movement. So XOM is like that, right? So once you finally get out of that, it might take a couple of years. You never know how long it's going to take. But when it does, you will see some good opportunity. This is no different. So this is kind of just interesting to watch. Put it on your radar. Some relative strength there. And if we see rotation in the market, you could see some nice trades. Charter, I just have to mention, is honorable mention of the stream. This is like everything that I talk about. If you watch the workshop and Edge in the market and all of that and trading big picture ideas, this is like textbook, picture perfect setup. And I'm still maintaining shorts here, just trailing prior daily bars. I was just going to call that out. Look at the weekly. So if we get into 253, we might find some support, but this has just been an A plus opportunity. One of those that you just wish you got more size on. Let's see what else. GS was interesting. So this kind of jumped out to me when I was scanning. Big spot at 694 and a big reaction on Friday off of 694. So just worth noting. Set a trigger or an alert at 694 if that breaks. But in near term, if we reclaim 714, could maybe see a push back up to upper part of the range. The banks have been very strong. Let's see. Spotify, watch 615. So similar category. Spotify and Netflix are almost interchangeable. Very, very similar charts. We just stuck with one for the weekly prep ideas. But watch 615. You can see a quick move to 600 if 615 fails. Amazon is a continuation play, so Amazon under 212.80. It's also a key level on the daily, so just watch that 212.80 spot for continuation lower. For the upside, if we get a big bounce in the market, watch a reclaim at 220. Reddit 196.78. I don't like that. Excuse me, it closed out of the 20% of the day's range, but it was very strong on Friday. It just couldn't quite get through that push to 200. So just keep it on watch this week for a continuation. If we start to break over last week's highs at 196.78, I would expect to see 200 at least be a very fast magnet. So there's a trade there. And then we've got some resistance above around 205 to 208. All right. One last question. Two questions. Somebody asked if there's any... where'd it go? Where is the question? Do you have any deal on the service? So yeah, we have a paid community. We share all of our ideas and everything and research and all the work that we put in. It's open house this week, so just come check it out. See if it's for you. If it is, great. If it's not, then I wish you the best. But we may do some kind of deal after. I'm not sure, but I think you'll see the value is pretty overwhelmingly clear compared to other groups out there. We run things inspired by how like a prop firm on the street might run things. We obviously still in the retail space, but our attitude toward the market is of a more professional tone and data driven. Try to do our best to uncover edge in the market and be quantify everything that we do in a process and just share that process. And we've got more than just one person in there that has experience. Myself, Space Monkey, J Money, and even the guys behind the scenes with Nick and John and others are very experienced traders, all contributing to making the most value we can. So somebody asked a question on how do I draw fib extensions. So I do have a video on that in the group. I'll give you a very quick rundown of just what I do, just so you have an idea. But there's a video going into more depth in the education channel. I think that this is just like a simple way to plot levels over all-time highs. Some people are reluctant to explain how they do things. I think that's kind of crazy. If you have a community, you should be teaching what you're doing. Otherwise, you shouldn't be charging for it. The way that I find levels above all-time highs, it's worked for years, it's very accurate, is a combination of fib extensions. So it's not just like one fib extension. The process that I use, it's actually Carolyn Borden, I think is her name, Fibonacci Queen. But this is like a throwback. I'm not sure if she's still active in the space or not. But she taught this method, and it works really well. It's super simple. You basically use Fibonacci extensions. So you go low to high to low to create the extension, and you do that on multiple time frames. And multiple points of low, high, lows. To create confluence around certain areas. So, you can, do one extension, but what happens is when you run this, so like on this point, low to high to low, and then you do like this low to high to low, and then you go into the hourly and do, the major low, high, lows of important moments within a stock's trend. You can even go out to the weekly. You'll see that the extensions will oftentimes overlap. And when you have clusters of like 2 or 3 or more, the more confluence there is, the stronger it is. You'll see those be super important points of interest for the stock. And I don't know, it's just math at the end of the day because the stock is just entering price discovery. And, volume obviously matters. Volume is the only reason why the Fibonacci is not perfect in the markets because people are involved. In nature, Fibonacci is perfect because it's just the way it's the way the math works. But with volume and other dynamics going on in the market, it's imperfect, but it's often still very accurate. So when doing that, there's plenty of examples. A lot of my S&P targets have been extensions. Like for example, this 6336 level before we ever got here. So when we were, looking like I had 6331 on the charts since like June or May or something like that. And our high here before we pulled back was 6331. So it's no secret. It's not any witchcraft or anything. It's just numbers and math, and it works really well. So there's a full video on that. If you have questions, just let me know. Just last question here. GEV, somebody calling out in the chat have been very strong. I agree with you. I haven't found trades in them, but for swing trades and trend trading, these have been great names. GE has been absolute dominant, move higher. This GEV as well, just super impressive. As you can see, the last time I charted this was back under 450 or whatever. Just really, there's some, as a saying goes, there's a bull market somewhere. So obviously the market's in a bull market, but you'll see certain names just really outperform compared to the rest of the market. And good on you for calling those out and paying attention to them. I'd have to do some work on the levels above where they're at right now, but for the sake of time, I'll do that behind the scenes. Just shoot me a DM if you want those charts. All right, everybody. Thank you all for joining the prep. We're going on over about an hour here, so that's usually we'll usually do a weekly prep like this. It's usually about a 25-30 minute call. Every week I'll pre-record it and send it out to the group along with the trade ideas. Wanted to do it live this week, so a little bit longer and get to some of your questions. So thanks for tuning in. Appreciate you all. I hope you have a great rest of your Sunday. I'll see you tomorrow morning for our pre-market call and prep. 8:50 a.m. We'll start our live stream in the Discord and get the work.